Hello, guys, and welcome to 21metrics podcast. I'm here today with Quant, Juhani, Savonen, and we are about to discuss markets, macro, and everything between. Welcome, Juhani.
Yeah, thanks for being here again.
Bitcoin looks positive. It's around 97k, so we have like positive sentiment here. Let's see what is actually going on. But first, check our sponsor, SideShift.ai, the best place to buy crypto. You can also buy gold tokens like PaxG or XAUT, which have been popular. So check SideShift.ai. But yeah, into Bitcoin. So 97k, Juhani. And if you look at this chart here, we are seeing wealth buying actually. Retail is not that interested yet, but do you see that this kind of like a lasting shift now, lasting changes of sentiment here, or is it kind of like, could it be a bull trap here to trap the bulls and then trap the longs and then down again, or how do you see this playing out?
I think at least the sentiment has like stabilized, so it at least supports the market that the general direction is upwards in all the gold token categories, I think. So that's like really supportive, and also just the beginning of a year is always positive seasonality. I think that we normally have January and perhaps early February, that everyone is excited after New Year, and then there's always a lot of buying activity, like we see normally in stocks as well, that stocks tend to do quite well in the beginning of the year.
Yeah, agreed. Yeah. So January has usually been a good month, and you
Yeah, I think so. Like February and March sometimes are tricky if there's something going on, like last year.
Yeah. So you see this being about seasonality then?
As well, but also like the sentiment has stabilized, and that's why we have seen also Nasdaq and other stock indices going up quite a lot.
Yeah. In the Q4, we had a couple of major things, like one of this like 10 of October event called like 1010, in which like a lot of long positions were liquidated, and I think that was a major event back then. And
yeah, for sentiment for sure. I think that's basically vaporized end of the year sentiment, and that's why we don't have any Christmas rally.
Yeah.
Instead, we had like massive drop in Bitcoin and other major cryptocurrencies from October to until the end of the year, and now it's a bit like more stabilized, I think.
Yes.
And that's what we will see later also in the slides, that the news are also like looking better than, let's say, a couple of months ago.
Yeah, I think during the 1010, like a lot of traders were liquidated. Also, like maybe bigger companies, even hedge funds, because that was like a major event, and there's like a lot of complaints about it. So yeah, but I think then we like kind of like lost 2 months, I would say, or like basically at the end of the year. But now we have maybe recovered. Maybe we now have new spot buyers.
Yes,
So
yeah, I think so. It feels a bit like the April, right? When we had like February, March, and then in the April we stabilized, and now when the sentiment is stabilizing, it might be that we get a couple of months already.
Yeah, I don't have that chart here right now, but I saw this chart that this small rally now is now like supported by spot buying, so not like derivatives market buying, but spot. So that looks good. So let's see. So maybe in theory, Bitcoin could like go back to 100k in theory, but let's see. So we have Juhani's models here. This is like the main point today. So your on-chain factor and red one is the Bitcoin spot price and blue one is on-chain factor. So do you still see it as like dropping, or could we now?
At least the decline has like stabilized. So when I did like update today, it's still like so downwards, because like a little bit, let's say, smoothen out all the seasonalities, but it still like shows it down a bit.
Yeah.
And we should still like remember it has really long lag, like 6-9 months. But it still like shows that Bitcoin price has like continued upwards, even though the fundamentals might not really be there in terms of on-chain activity.
Yeah.
So I think the story of Bitcoin in the last couple of years has been mainly the treasury companies, right? Like that people use as proxies. But I think like fundamentals still would support, let's say, lower levels. But that might be also an indication for tech stocks as well, that they might have, let's say, reaching bit too rich valuations, I would say.
Yeah. So this one follows like addresses and address activity and
like mining activity as well. Like if there's a lot of mining happening, how many blocks are generated, and also the mining income as well. Like if it's profitable to mine, then you should expect higher prices, right? Because then there would be actually demand going to Bitcoin, I would say.
Yeah.
So it's especially like how many addresses there are, what's the growth of addresses, and how active these addresses are. And there's like these three different blocks, like network activity, addresses, and what happens in the mining side. If there's a lot of blocks, if there's actually a lot of activity in the mining itself.
Yeah.
And also like hash rate and that kind of things, obviously. That's part of the network activity side.
Yeah.
So that has been like declining quite a lot, like in 21 as well. And it's kind of like interesting to see what happens if we stabilize there and start to increase again, because that would be really bullish then. Like if we would have like the cycle that we have from end of 22 to end of 24, then that would be really bullish, I would say, because then we could see like way higher levels than we expect now. Because currently, I think the upside is mostly driven by geopolitics and a little bit mistrust on the Fed. What happens to Fed now when they have the lawsuits against the ball? So it's more like a driving factor, I think, like the sentiment plus the geopolitical madness, like all the volatility that we have seen in the last couple of weeks.
Yeah. But as you mentioned, the treasury companies, I think this factor doesn't like they take into account that like a lot of the activity is now happening like within MSTR and ETFs and treasury.
Yeah, exactly. So those are like the net buyers, basically, I think, plus some funds, obviously. And this would only take account the activity that happens on chain, but it would be the fundamental value of holding Bitcoin. Like it would be like more like looking what's the value unlocked by some DeFi tokens, right? Like if you see that a lot of value is unlocked by some tokens, then you would expect them to be more valuable. But now, because Bitcoin is kind of like more like a benchmark asset that also might cause deviations from fundamentals, I think. That's what we normally see also in stock market, right? If you see a lot of index buying of SP 500, then it might deviate a lot from where it should be, actually.
Yeah.
Because people just continue buying and buying and buying until the market tanks at some point. But the dynamics are definitely different than, let's say, 4 years ago, right?
Yeah, agreed. During the fall, we had Artur Shabak here as a guest, and I remember he said that we discussed this like Bitcoin's declining activity, and it has been a trend for a while now. And as we mentioned that because the activity is in ETFs and MSTR and treasury companies, but he said, like Artur said, that it's going to be a problem for Bitcoin eventually, that like the activity decreases, and it's kind of like the trading is happening elsewhere. That was his comment. I don't know, but yeah, this has been a trend for a while, and because people are not using on-chain Bitcoin, and if you have been using on-chain Bitcoin, let's say like personally, I'm doing these trades. I have been recently doing these trades where or transactions where I move from Bitcoin from physical Bitcoin to exchange, and it can take like 2 hours if you started that late. You want to see the transaction materialize. You need to wait to the night basically, and just it can.
Yeah, actually, that's why people use Tron or Avalanche or and the transaction cost also way lower as well. That's also like the main drawback in Bitcoin, I think. That's why I'm more like bullish in the infrastructure and more like the DeFi tokens, where I see like more, let's say, more the real value that we can get from the blockchain technology, I think.
Yeah. Of course, you can argue that Bitcoin is digital gold, and like gold, you don't have to move that around. But when you make that transaction, like in practice, it can take many hours, and that's a long time. So yeah.
Yeah, I think like tokenized gold is better alternative if that's what people want to do, like have more liquidity. Because I think in the end, like probably equities are going to be tokenized anyways. So probably more the direction, I think.
Yeah. By the way, I think like the like EU-based exchanges under the MiCA are not allowed to like offer these like BAX-G and XAUT like these gold tokens anymore. So actually, that's the.
Really? Okay.
I, I
I
think
don't know
I think
because
I think they can offer and but basically like under the MiCA you can offer this.
yeah, I guess like the banks don't really like that their assets will be tokenized because that would reduce their transaction fees a lot, I think.
So if you
Yeah.
follow the book, actually they cannot. So it's
Yeah, that's the thing, I guess. Like the Mika makes your life terrible, so in general.
yeah, that's
Yeah, because I
that's
noticed that I started to get like letters from the exchange that they have to follow Mika and they have to wait to get license for perpetual futures or something like that.
yeah yeah that's
It was like this was really weird. I think so. After
yeah
like
it's
5 years when nobody was asking anything.
yeah it's weird. But yeah, let's move on. So this about crypto news sentiment and this data is a bit old, but we are maybe seeing a
Yeah,
shift.
it's like a couple of weeks, but you basically see that it was trending upwards
Yeah.
a bit.
So
So that we basically had this decline from October, like we had like pump up and then massive decline basically. And I think we see even better in the next slide that we have. We can also move there a bit, I guess.
Yeah.
Like here you basically see that it's more like smoothened. Like the 30-day average is smoothened by 15 and 20 days, and you basically see here that after mid-October we had like this massive drop in sentiment, and that's why the price have also seen, let's say, lower levels. And now we in 10 days ago when I last time updated this thing, we basically had like already the increase upwards, and I think that supports in general all the altcoins and any other, let's say, crypto assets at the moment.
Yep.
So we basically have like more in the recovery phase of the sentiment side, I think, and as we already have seen in the other slides as well, that there's more whale buying at the moment.
Yeah, that's right. So like looking at the news sentiment, it looks better. So yeah, let's see. I think
Yeah, like
Bitcoin,
short term long would make sense, I think, at least at the moment.
yeah, short term.
But yeah, short term at least. Then after January, February, then we see what happens because it's always bit surprising with this Trump presidency, like what happens in the geopolitics. Like,
Yeah.
as long as the volatility stays, it might be supportive for Bitcoin, I think. Let's say, central bank assets, like we have seen the gold and silver almost doubling since October, I think.
My thesis would be that we more or less stay in kind of like a sideways market. Of course, like I could see Bitcoin reaching like 150K if the environment is positive for it. But overall, I think like the market has now matured and like infra-based projects will win, and also like stable coins. So I see like I don't expect any kind of like huge collapse, but also I think like the upside is limited somewhat.
Yeah,
So I think
it's going to be a bit like Nasdaq that trades on weekends.
Yeah.
That's how I see it. That's my expectation, I would say. Like for the upside, I would just go to the DeFi tokens or like the infrastructure ones, because there you still have like reason why we would have demand for those kind of things, I think.
Yeah, so kind of like this is why I chose this headline of mezzanine market. So kind of like in between. So like I'm not expecting collapse, but also the upside is limited. There has to be a limit. So something in between, like between the levels. So this is how it looks.
Yeah, I think I don't think we are going to see any large Gagger numbers or ROI numbers for Bitcoin in next few years, because I think it feels a bit like oversaturated market.
Yeah.
Like data center equities, also like power trading, because I still work in this field. Is you kind of had this like massive loop, also in carbon as well in 22, like in the peak of COVID, that everyone wanted to get in, and then you had like a couple of years when, let's say, some companies disappeared. And that I think this is like similar thing with Bitcoin, that if everyone knows the asset is going to go up, then it doesn't go up. It's a little bit my thesis in most markets where I invest, I would say.
Yeah, kind of like the trade is like too crowded, as we have seen before.
Yes, it becomes crowded. Like that's what we saw in these treasury companies, that Some of them lost like 80% of value from October to December.
It is
Like
crowded.
like the Swedish one, like 800 or what's the ticker, I think,
Yeah.
something like that. And also like the smaller ones in the US as well. Those were almost wiped out completely.
Yeah. In that sense, like it might be healthy for Bitcoin or the crypto market to actually like collapse for a while, because then when like nobody believes in that, then it's not a crowded trade anymore. But now when
Yeah, actually,
everybody
it's just
positive,
like that. We last time I think we spoke about the DeFi technologies and this like crypto native equities. They added like 20,000% from the bottom in 23
yeah,
to 25, and yeah, I think it's when there's like wipe out, then I consider buying again. That kind of highly speculative
yeah,
venture capital style equities, I think.
yes. And like Bitcoin's nature and kind of like the ethos has changed. Like I remember like the old days, and when it was like kind of like a rebel thing, or like ecosystem back in like 2016 when we had this embassy. But right now it's like it's very like accepted by governments and Wall Street and everybody. So it kind of like makes you think that okay, it's not like a rebel thing anymore. So what is that? So it's kind of like now like part of the US like
It's establishment kind of.
establishment. So yeah,
It's been like standard part of any portfolio, basically like teachers from pension fund or something like that.
yeah,
Because I remember that it used to be like only like libertarians in the US and perhaps a little bit in Europe as well. Like
anti-establishment, but it's not anti anymore. It's like pro everything. So that makes you
yeah,
think that
I think it's basically just all the business people from fund companies are now just trying to sell you like their ETF or their services to invest in Bitcoin.
yeah,
That it's great. So
yeah,
it feels like saturated. Then like you have like people with suits selling you some digital assets that probably that's a bit saturated market. Then I think.
yeah. And this is the big question. I think that has Bitcoin lost some of this is like rebel sexiness in a way, because you can only have that for a while, and then you're like anti-establishment. But when you're like very pro-establishment, then you kind of lose kind of part of that. And when talking with like old OG Bitcoiners, I can see that we had Fabio here in the podcast a while ago. Fabio is in
Okay.
Switzerland, Neuchâtel, and he has kind of like pivoted to gold. He's kind of like a gold maxi now. And then I know
Yeah.
pivoted to Monero, like this privacy coin. Actually, Monero is now at all-time highs. So you can also see that. But
Yeah.
for sure, some of these OG guys are like, oh my god, this is like too pro everything. I'm gonna pivot to gold, Monero, AI, whatever, which is kind of like uh, more rebel now. I can see this like shift happening here.
Yeah, it's more like the infrastructure side in digital assets, I think, where you still have,
Yeah,
let's say, the tech side is more driven there, because I think like the sales story for Bitcoin is mainly that it increases more than equities, and that's not really a story that you want to hear as an investor, I think. If someone tries to
yeah,
sell you something with past returns, that never
yeah.
ends well, I think.
Yeah, and there has to be like this law of diminishing returns, which usually happens is
Yes.
that like okay, Bitcoin's going up, but the pace will slow down, so it will now maybe
Mhm.
returns will be close to Nasdaq or something, but it's not kind of like that kind of explosion or rocket anymore. It maybe
Yeah, you
used to.
don't get like returns of thousands of percents. That's the same thing with these digital asset manager equities as well. Like when they were like basically worthless. If you bought them, then you made a lot of money. But if you buy
Yeah,
them today, then you shouldn't expect much higher return than Nasdaq. Some volatility adjustment a little bit upwards, but you
yeah,
wouldn't expect to get really rich really quick by buying
yeah.
those.
And also, if you're being honest, like there is no substitute for being early. So if you buy Bitcoin now,
Actually,
it's very different than if you bought it in 2016 for 500 USD. It's very different because you cannot like if you are realistic, you cannot like expect same kind of upside ahead as you could maybe expect then. Although if I'm being
yeah.
honest, we didn't expect that back then either. But still, like it's just kind of like if you look at how much liquidity is needed for Bitcoin to go like 10x right now, it's like huge amount of money needed, so it doesn't
Yeah, actually.
anymore. While it was a very small thing back in those early days. So yeah, it's very different.
Yeah,
So
that's holds for equities as well. Like if everyone would have thought that MSCR makes 1,000% a year or something like that in those extreme years, then those returns would have been there. So you really have to buy some really distressed assets, but that's also holds for crypto, right? Like
yeah,
if you would have bought now in probably end of December, then you would have probably made decent price.
yeah,
So I think it just makes sense to buy when market is distressed, like everyone is worried, and that's the
yeah,
best situation, I think.
yeah. So timing is critical, and there is no like equality. So those guys who
Yeah,
bought for
actually.
they just have a huge edge, and it doesn't like disappear. You cannot like think that okay, I'm gonna buy it now and I have the same edge. It just doesn't
Yeah, it's
work that way.
actually that's like the same thing. People who bought like Apple in 2000 or something like that, or Nokia
Yeah,
in 1990s. But
yeah,
when after the largest returns are made, then the returns are really small, I think. That's
yeah,
why I wouldn't buy any crypto equities at the moment, I think, because I think it is too much gamble. It's just there too richly priced.
mm,
Perhaps there's like some crypto winter again, and then we get really cheap prices, but you never know.
yeah. If like the market would like reset, then it would have like a huge upside again. Basically, we have seen
Yeah, like a couple of 100%, I think, thereafter,
returns.
right?
Really, of course, it will like destroy a lot of people's savings. But then again, like the upside would look very different when everybody's like negative. So then, like, yeah, it's
Yeah,
completely
it would basically correct the pricings, I think, because everything is quite expensive now.
yes, that's right. Yeah, everything's expensive. But let's move forward. So I wrote this article about Nexo. So Nexo users are taking a lot of loans and using Bitcoin as collateral, and of course also like other cryptocurrencies, Ethereum and stablecoins. But 54% of them use Bitcoin as collateral. Here is the orange side, and Ethereum is the blue one. And of course, like this smart way to kind of like preserve your wealth. So you don't have to sell your Bitcoin. You can just like take a loan against that. So LTV is around 50%. So let's say you give Nexo like one Bitcoin, you kind of like get around 50k USD back, and yeah, it's a smart way. So their loan book is above 2 billion USD right now. So this is interesting. But my thesis also is that, as we discussed, Juhani, that infra is the winning party here, and we are seeing stablecoin growth. CryptoQuant says that stablecoin active addresses have grown like 450% since last year. So I think like this is the part of infra, and like big exchanges, platforms, Binance and stablecoin companies are the winning parties here, and
Yeah,
also
I
like
think so. Yeah, I think so. Like if you would have to do like bet on something, then you would just buy Binance or exchange tokens, I guess. That would be like
BNB,
the
yeah,
lowest risk, I think.
yeah, and also like Paxos with their PaxG gold token, and Tether with their XAUT
Mhm.
gold token. These are the winners, and they have been smart. Although you can't sell these tokens under MiCA, but anyways, I think like the infra is the winner. So if you own a platform or can invest in these platform related companies, you are with the winners. So this is my thesis, and also like it's because the market has now matured. It's not like this new rebel market anymore. It's more serious serious
Mhm.
market. This is what is going
Yes.
on. I think this is probably my final thesis. Do you have anything to add, Juhani?
Yeah,
uh,
I don't think so. I think it's just the exchange tokens and some other probably utility tokens that have more like
would
future,
you
I think.
would
Yeah.
you see gold being expensive when looking at this PACG and these gold tokens? Do you see gold peaking, or is it just like going up this year?
I think as long as the geopolitics continue to make things worse, then we just going to see upward movement there, I think.
Yeah, yeah, yeah. Agreed. I think that's all today. So we can wrap this up. Thanks a lot, Juhani, for your insights, and See you next time.
Yeah, thanks a lot. We do so. Thanks. Bye.